How do I claim my car expenses in my business? What are the options? Hi, I'm Kimberly Shapcott, qualified chartered accountant, property investor and entrepreneur. Let's sit down and have a chat. When running your property business, you are likely to be doing viewings, you are likely to be going and looking at different things, and you're probably going to be using your car in your business. So on this basis, the next question that comes logically to my mind is, how do I claim that expense? Because I don't have a company car, but I am using my car to do business for my property business, whether it be in a company, whether it be properties in your own name. So the answer to this question is claiming business mileage. Now, business mileage is basically an allowance that you can claim against your business for using your personal car in the business. Now, there is two discrepancies between your company and doing things in your own name, and we will make sure we cover those today to make it clear what you can and what you cannot claim depending how you are set up. But the first thing that is probably the most important to cover is, what can you actually claim? As a business, you can therefore claim 45p per mile for the first 10,000 miles and then 25p per mile after that. Now, this is based on a tax year, so you can do this in each tax year from the 6th of April to the 5th of April, and that is irrelevant of whether you are doing it in a company or whether you're doing it in your own name for mileage purposes for your 10,000 miles. Now, what does this 45p, 25p cover? Well, it kind of covers everything to do with your vehicle. So this covers the fuel that you're going to be putting in. It covers the insurance, it covers the road tax, it covers any repairs on your vehicle. So you can't claim anything extra apart from these mileage rates, which are per mile. The reason it goes down from the 45p to the 25p is because after a certain point, you're not going to have any increase in your insurance, you're not going to have any increase in your tax. The main cost is going to be your repairs and it's going to be your fuel. This is why those rates have been set at that point, and this is what you can claim. Let's now circle back to the why you would claim it. And the reason you would claim it is to really take account of the extra expenses you as an individual are incurring to run your property business. Now, there is one discrepancy between a limited company and doing things in your own name. If you're doing things in your own name, you can only claim mileage for properties that you actually own. So if you're doing viewings, you can't claim that mileage because that's all speculative. So as an individual, you're only going to be claiming the mileage for the properties that you own, which maybe you're going and visiting for mileage for refurbishment meetings because you're getting it refurbed and you want to go and check in where have they got to, what's happening. You might have meetings with tenants, you might have meetings with letting agents, for example. All those sorts of things are going to be allowable for business purposes. But if you're just going on a viewing to see a property you might want to buy, you can't claim that as an individual. As a company, that is completely the other way. You can claim all your mileage because you are working for the business as an employee, as a director, to go and actually try and find projects. And this is an expense as a officer of the company, as an employee of the company, that you're incurring, so you're going to claim it back off the company, which means any meetings with professionals, any networking meetings, any viewings, any going to visit your own properties, all of this mileage is allowable for tax purposes, so you just need to keep track of it. So what records do you need to keep? Now, there's no defined records that you have to keep apart from its evidence of the mileage. So generally this would include your receipts for your fuel, so you can show that you have had to put fuel into your car. And the second one is keeping track of what mileage you've done. So this is literally recording what trips you've actually been on. I've been from this postcode to this postcode and I've done 3 miles today. I've now gone from this postcode to that postcode. I've done 5 miles today. Yes, it seems a bit excessive, but this is arguably the evidence that you should be maintaining to show what your mileage is for that tax year. Now, there's no stipulation of how that is maintained. So some people just keep a book in their car and they'll make a note of the journeys that they take, which are for business purposes. Others use apps, and there's quite a few different apps out there that will track your locations for you. So if you're using something like QuickBooks, that has mileage tracker availability. Or there's one called MileIQ, and there's other ones out there that I've seen that my clients have been using to keep track of their mileage. So find the best method for you of how you want to keep track of it, and that will give you the figures that you need. When you've got the figures, now you can complete your expense claim form to your business to say, this is how many miles I've done at whatever the rate is, so the 45p or the 25p, and you just need to keep track of when you hit the 10,000 so you can split that correctly on your expense claim form. And having got to that point, you now have an amount that you're putting through as an expense, which then you'll be able to claim back from the company. Now, I do appreciate that some people who may be earlier in their property ventures may not be able to actually take that money back out again, because there might not be any money there, or if there is money there, you've probably put it there to be able to take it, which is kind of a bit nonsense. So at this point, you may be, I can't actually take that money. Now, that's not a problem, because that will just sit on a loan account in the company owed to you when you can actually claim it back, when the cash is actually available in the bank to refund to you. When should you be claiming this mileage? Well, you should be claiming this mileage in the appropriate accounting period that you undertake the mileage. Although there's no set requirement of when to claim it, you just need to make sure you keep the records so that you can actually claim it within your accounts to claim the tax back. Is it allowable for tax? Yes, it is allowable for tax purposes. The main thing is keeping all the records which support the claim that you're putting in, which then will go into your company or business accounts as an expense and be deducted off your income to reduce your profits, so you get taxed that little bit less. In summary, make sure you keep track of your mileage, and then you can claim that through your company. The rates are quite generous at 45p and 25p, and it's a great way of reducing your tax in your business. Hopefully today you've figured out how you are going to be claiming your mileage, your car expenses in your property business. If you do have any questions, then please do leave a comment. Please like the video and please do subscribe to the channel. And let's make tax less taxing. Let's make tax less taxing.